Welcome to my regular look at WTI crude oil price analysis. Take also a look at a few fundamental sentiment indicators to help us understand where the crude oil price may be heading next. Now, if you're new to the channel, please hit that subscribe and bell buttons. And with that, let's dig in and get on and see where crude oil may be heading next. So into our sentiment indicators here at the bottom, seasonality, it's a bit flattish at the moment. We'll start to pick up into the summer, but even then it's not too dramatic for the next few months. More interestingly, the commitment of traders data above, the red line being the commercials, black line above that being the large speculators, signalling a bit more bullishness in the price there, and heading, or marrying that into the price at the top, which is a bit more neutral as we've seen. Trend still strong to the upside, but like I say, those commitment of traders indicators, the large speculators, large commercials, key ones there, starting to show more signs of bullishness. Baker Hughes rig count numbers, a key barometer of the energy industry sector. Use the US line there, +7, change from prior count, plus 257 change from last year, so still all holding bullish there. Inventory numbers last week worse than expected at 1.302 million barrels, forecast for this week at minus 0.457 million barrels, and those numbers are out later today. What is the weekly longer term look line chart giving us? Well, we can see that lovely trend up from late spring 2020. Price mostly behaving within that 2 standard deviation regression bands there, just dropped below sort of late 21, and then we had the Ukrainian-Russian conflict that spiked that price up over $100, peaked, and now is really consolidating back within the 2 standard deviation regression bands. More around the mean at the moment, but that 78.6% Fibonacci line looks tasty for a potential pullback sort of support area, $95. And it breaks there, then it's that 61.8% Fibonacci line, about $78.2, which is sort of converging as well with that pink trend line that I've drawn on there. So that could be another key area of pullback support if the price starts to come off and to the upside, where it's got to get through this consolidation pattern before it starts thinking on moving higher towards $120, $130. So if you're looking for bullish entries into oil, then the forward line break chart could help you in. And currently at the moment we've got the bullish setup there, $103.50 is the entry point, which is sort of where we are at the moment. So if you're feeling aggressive, now could be the time. More conservative, $120 up there. And if you want to speed potential entries in, then this chart's made on the daily setup. You could reduce the time frame maybe down to 6 hours, 4 hours, 2 hours to get a different set of entry points. But this approach, $103.50 and $120. So the daily high Kanashi are signals at the bottom, short-term bearish, volatility picking up towards its sort of longer term average around the mid 40%, and volume sort of lowish, trading below its longer term moving average. Nothing too exciting happening there. Then onto the price, we've got that green line there, which is a key pullback, major pullback support area around $60, and the price has been trading within the 2 standard deviation bands. Again, it did pop up due to the conflict that we mentioned in the weekly line chart, but as you can see, trending very nicely, consolidating very nicely, between the two purple trend lines, and between the 2 pink box breakout setup. So pretty neutral at the moment there in terms of price action, but with that sort of triangle pattern setting up, could it be there for potential upside breakout to higher numbers? We'll have to see, but at the moment quite quiet and quite neutral in between that $95 and $110 range. So if you're a range bound trader, then maybe it's your time to make some money. And onto the Renko chart. Well, we've got a $1 block size being used here. Down the bottom, the DMI marginally bearish, looking like it could switch anytime to a more bullish setup, and those signals in the very shorter term are both bullish. Now heading on to the price, we can see that sideways action since mid-March, and potential targets to the upside: $115, $130, $145 some area, and then downsides 38.2% line, probably the key sort of area around $90 in the shorter term, then $80, and then down towards $65. And don't forget the $60 green support line that we had on the daily High-Kinashi chart. So at the moment though, very neutral feel to the price of oil. So in terms of a score then, I'm going to go with neutral again. Price range bound, like I said, between that $95, $110 area until it breaks out from what we saw on the daily High-Kinashi chart there, between those two purple triangle lines, patterns building up there. Then I will probably still remain neutral. No definitive near-term trend direction at the moment, and High-Kinashi Renko chart showing that out, really pretty neutral overall. Interestingly, the commitment of traders, that's the big bullish takeaway I suppose from the analysis, starting to turn more bullish that way, and rig counts, line breaks, all bullish at the moment. Seasonality a bit flatter. Now in terms of targets, the upside 2.85 and 4.28 to 1, so some good numbers there, and downside still not bad, 1.8 and 2.8 to 1. But overall, WTI crude oil neutral at the moment. So not a lot of new takeaways there from the analysis. Really, I suppose the big takeaway is it's still consolidating. It seems to have worn itself out after that rapid rise into the early mid $100, as it now starts to consolidate around that $100 area. So I'd be really interested to hear from you where you think crude oil might be heading next. What could spark off another rally or see those prices drop dramatically? Would love to hear from you there. Now if you liked today's video, please give us the thumbs up. Don't forget to hit the subscribe and bell buttons, and all that's left for me to say is thanks for watching, good luck with the trading, and I'll see you in the next video.